What's up, guys? We have a major Fed meeting this week, and we're going to take a look at what the options market is saying as we do every Sunday night. It is May 4th, 2025. Don't forget to give the video a thumbs up if you like the content. Consider subscribing to the channel. Also, if you like the content, you want to see more and get into more in-depth in options market analysis, swing trading alerts, live day trading, come find me on carnivoretrades.com. I know you will love it. Anyways, let's get into it this week here. So we're going to take a look here at the spiders, SPX first. And we basically, in 2 weeks, we had a 600 point rally. Yeah, exactly 2 weeks. And we have 9 in a row, the hottest streak since 2004. And we did reclaim my trend line here on a technical basis. That has been out of the way. We talked about this before. Step 1 was above 5,500. Step 2 for bulls was close above this blue line. And we did do that on a weekly close too. And there's lots of other equities out there that repaired a lot of chart damage. IGV, XLF, broker dealers, reclaiming trend above all the moving averages on the weekly, daily, key sectors. So bulls definitely had a victory this week, and they did it on, we had bad news too. We also had some good news later in the week. We had bad, negative GDP. We had, not the greatest labor data. So the market was fighting off the bad news. And that's a positive. A lot of people talking about how overbought we are. And, on the low time frames we are. RSI is not even at a 60 yet, though. So we could still have a little bit of room to go, potentially, into Wednesday. But we're going to talk about where the likely top is based on what the options market is saying. And I just saved a couple of screenshots, really, from our platform here, which is only available in the trading room. And you're going to see here, we're just going to take a look at SPX. We'll look at this Friday. And you can see here, right now, I know it's a little hard to read. I had to zoom out and crunch it's hard to see these numbers. They're kind of crunched right now. Normally I wouldn't look this, deep, but we moved 600 points in 10 days. So I kind of had to zoom out because I didn't want to miss any other levels that may have gotten left behind. But nonetheless, you're going to see, our big LG1 here, as we call it, is 5,700. So that's your big magnet. And you can see right now, even with that being a call wall, deltas here, this is the delta, it's overwhelmingly positive. So this market is, it's supportive still. Now, keep in mind, this data is as of Friday's close. So oftentimes there's a little shift. In fact, there always is a little shift that happens Monday morning once all the data kind of rolls over in the open interest change. But right now, really positive deltas for this Friday. So that's after the Fed. If you want to take a look at, and you have a 5,800 call wall there. We can also look at SPY, if you'd like to do that. 570 and then 575. 575 will essentially line up, it's actually 576-ish. That'll line up to about 5,800 on SPX. Again, very positive deltas here. Don't worry about the volume. This is our proprietary dealer blend here that catches things that traders who only focus on gamma exposure miss. I see this happen all the time. Oh, there's a gamma wall here, so you got to go short. And sometimes our proprietary blend will tell us, you don't want to go short there. It's going to go to the next one. But not really seeing much here. Big tail hedge up at 600, but not going to worry about that. And then we got QQQ, a little 490. 485 is actually an LG1 for Friday, and then 500. But again, that 500 right there, that's telling us that's the king right now. So you have smaller, this is your LG1 in terms of gamma, but delta positive, right? And this right here, we can't give away our formula, but this here is telling us that this could actually be more important here. And 500 would line up more so with 5,800. A reason why I'm really going to key in on 5,800 here is if we flip over to, so this is 516. You can see kind of a similar look. But 516 on SPX, look, it is way zoomed out. Normally it wouldn't look like this, but look at how overwhelmingly just standalone 58. This is 5,800. I know you can't read it, but it's 5,800. And we're seeing the deltas there on both sides. Seeing the secondaries there on both sides. It looks like that is going to be our cap. That's going to be our magnet for OPEX, unless anything changes, right? We could, if something happens on the Fed, we start selling off sooner. these numbers will change. But if we're going up, right, into the next week or so, into that area, it's going to be a wall. And you can see the 575 there on SPY as well. Again, Delta's pretty positive. Look at the SPX, you know, pretty much, you know, even on this side, but this week, you know, very positive. But yeah, those are really the levels here. Now you have some down here for 516, and they're kind of even. So if we pull back, we've got lots of SPY support, but really SPX doesn't really have much priced in on the downside yet. So right now, I wouldn't even worry about the pullback levels because we don't even have a pivot high yet, right? We've just been going up for 9 days. I'll just say right now, if we lose yesterday's low, we're probably going to come down and test at least this gap and then 5,500. But basically, what I'm trying to say, the big takeaway right here is that we're not going through 5,800. There's no way. I mean, anything's possible, right? We've seen, we've dropped 22% in a month, right? But it's going to be very hard to get through that right now without a pullback or a flag or something of that nature. So that's your hedge area if you want to do that, especially for up again. And then this is a pain trade. I mean, a lot of people don't think we can go up anymore, and I've been hearing they go, oh short, there's a gap, you got a short for the gap. And that's why we stayed long all week, because we knew that the pain trade was likely going to be up, and that's the case. So yeah, we can still go higher. There's nothing saying we can't. Again, like I said, you can see the deltas there. They're really positive. And again, you got to use all of the dealer levels. You got to really actually understand dealer positioning. You can't just look at gamma exposure and just expect that to. I see these channels here that have thousands and thousands of subscribers, and they're just leading people off a cliff because they're just focused on on the GEX, but you need everything else to put that together, and that's what we do here. But in any case, yeah, 5,800, that area, it's going to be heavy. It would also be like a little bit of a pierce of the 200, so you could maybe stop out some shorts, maybe get some people to chase CTAs. So that would be like ideal. That would be kind of a fat pitch, I think, if we got up there, especially into the Fed. But yeah, on the downside, I would normally give better levels here, but I need to see a pivot first in order to really start doing the math. Then we can start putting fibs on the chart and stuff like that. But right now, suffice to say, 5,500, even just from a technical standpoint, that's going to be a big bull bear line. So that's what we're looking at into this week. Hope you guys liked the video. If you like the content, again, give me a thumbs up, subscribe to the channel. Come find me at carnivoretrades.com. I'll see you guys all Monday.